All right, testing. Just a quick check. Okay, you guys should be able to hear me. Okay, so we'll get started for today's session over here. Welcome back to the new week. Okay, so as usual, let me walk through some of the housekeeping over here, and then we'll get started for today's session. Yeah. Okay, so we run this on a week-to-week basis every Monday. The objective and the intention of this sharing session is to give you an overview of the week, to help you prepare a little bit in terms of like sharing with you some of the insights that I have in the market, right? Some of the events that you definitely want to take note of as you're trading throughout the entire week itself. So of course, quick disclaimer over here. Okay, whatever we're gonna cover today is solely for educational purposes, and of course, all the opinions and analysis are just my personal point of view. If you're trading or even investing, make sure you're aware of the risk involved. Okay, and that's something that if you need more guidance, right, speak to the relevant financial advisor itself. Okay, so that's a quick disclaimer. Now, what we're gonna cover in today's session, and I would say every week it's more or less the same. Okay, as I mentioned just now, we'll summarize a little bit what has happened previous week, go through some of the events that you want to take note of this week. Okay, and then after that, we'll look into the technical charts to see to share with you some of the analysis and opportunities available, and then we'll end off with a quick Q&A. So of course, if you have any questions, feel free to just type it into the chat, or if you're watching it right now on the YouTube side, then just type it into chat. I'll be able to look at it as well. Okay, so this session is concurrently running both sides. Whether you're joining in directly in Zoom or YouTube, I'll still be able to see your questions. Right, I'll be monitoring them and then answer those questions along the way. Good. Okay, so let's take a look at the Forex Factory calendar to give you a quick summary of last week itself. If you're celebrating the Chinese New Year, or we call it the Lunar New Year, okay, then you probably won't be very active in the market, right? You'll be probably busy celebrating. But last week itself, we do have a couple of things that you might want to be aware of. So let's do a quick recap. We have the Australia CPI year on year coming in. The inflation kind of experience that we are seeing in the Australia side is still pretty high, right? I mean, if you're following in the US side, inflation has peaked and start to come down since late last year. But you realize that some of these other countries, the inflation is still pretty high, right? So case in point over here, you can see Australia CPI year on year is still high, right? It's still increasing. That's where earlier this year when we had the networking dinner in Kuala Lumpur, I did share with the audience, right, who attended that dinner. I mentioned that 2023 will be a very interesting year in the FX market, especially in the fundamental point of view, because we're definitely going to see some divergence in the policies that this central bank is going to adopt, right? I mean, the past couple of years, if you have actually been monitoring and been involved in the FX market, you know that there is a lot of fundamental shift, right? So from COVID cutting rates very aggressively to inflation hitting in and then aggressively increasing rates again. And this year in 2023, there's a very good chance that we will see another policy divergence, right? Which means that some banks are likely going to start talking about cutting rates, while some other central banks may still be in a hiking process. Okay, and when you have this kind of clear divergence, when one is very hawkish, one is very dovish, you get a very, very clear and nice trend in some of the FX pair as well, okay? So it's interesting to monitor. It's important to keep an eye on all this data here. Okay, so case in point, you can see in Australia, okay? Last week, we also have the core PCE price index coming in, but nothing much of a surprise, okay? So not much there. Advanced GDP is not too bad. Okay, but again, these are not that important as of right now. Bank of Canadian actually raised rate by 0.25%. Okay, so again, nothing of a surprise over there. So not much of a movement anyway from last week. Okay, so if you jump over to this week here, it's gonna be a very active week if you're looking at the data itself. Okay, Tuesday, which is tomorrow, nothing much. Wednesday, not much as well. We do have a little bit of a New Zealand labor data coming in. But again, that's not the most important data at this moment. And then of course we have our Fed funds rate coming in on Thursday, okay, midnight. If you're based in Malaysia, the market is currently expecting a 0.25% hike, okay, which is already slow, right? Because in the previous hike, the increment was 0.5%. So I think the debate right now, or what traders is really monitoring at this moment, is for this particular FOMC and Fed funds rate. Okay, will the Fed increase it by 0.25, or will the Fed still do another 0.5 hike? Okay. So when the actual hike, if let's say is 0.5%, which means from 4.5 it brings it to 5%, it's gonna be a surprise, and there's a good chance that we might see some strength in the dollar coming back. Okay. Now the dollar has been weakening since late last year, beginning of this year, simply because the expectation over here is that the Fed will eventually slow down its hiking process, and at the same time, recession is coming, and therefore there's this conversation about cutting rates. Okay, so that's where we saw the dollar kind of sell off late last year, early this year, and if this Thursday FOMC Fed funds rate is gonna give us a more than expected surprise, okay, we might see the dollar come bounce up a little bit. Okay, so that's one to keep an eye on. Then on this very same day in the evening, we have the Bank of England. Okay, so over here you can see that rate hike expectation is 0.5%. Okay, and then we have the ECB again, rate hike here is 0.5%. I mean, even from this itself, okay, while we are all still in a general hiking process, you can start to see a little bit of a divergence happening already, right? The expectation over here on the Fed is that we're slowly increasing, right? The pace of increment has dropped. Whereas if you just compare to BOE and the ECB, you kind of see that they're still hiking at 0.5. So that's something that what we meant by divergence in policy, right? Right now, everyone is still hiking, but one is slower, one is faster. At some point in time, we're going to get even bigger divergence where one is talking about cutting and the other is still hiking, okay? So this is something that probably there's a very high chance happening within in 22-3, perhaps, somewhere towards like mid 22-3 or even Q3 of 22-3, and that would present a very, very nice opportunity in the FX world. Okay, so keep that in mind throughout this year itself. And then on Friday, we have our, NFP. Okay, but to be very honest, I don't think that is going to be the primary focus for this week. Definitely the FOMC and the Fed funds rate have carry more weight, and it's more important than the NFP on Friday itself. All right. So definitely a lot of things that you want to keep an eye on more into like Thursday and Friday. Okay, so be aware of all these events as you're looking at the market itself. Good, so let's take a look at some of the technical charts over here, okay, for the week. I'll start off with the dollar index over here first, okay. So first up, if I zoom out a little bit on the dollar index, just like I mentioned, late last year, early this year, we've seen the dollar drop. Okay, in fact, to be more precise, I think the peak established early October last year. Then we start to see that drop all the way down until where we are right now. Okay, now from a technical Elliott Wave perspective, my expectation over here is that we might see a good chance for a temporary retracement or a bounce, simply based on just this structure itself. Okay, the market has seemed to lose its momentum to the downside, and if you bring in some momentum indicator like the RSI, we are seeing that divergence, right? The price is coming down, but RSI is actually printing a higher low. So this kind of indicate that there's a higher possibility of a bounce higher. Okay, the only question here is, will this be a big retracement back up, or is it just gonna be a very shallow one that gets a corrective structure? Nonetheless, right, I think the primary focus for the dollar right now would definitely be more on, can I get involved in the buy than, looking for sell at this time. Okay, so the general bias here is definitely looking for buy opportunity. We're holding on to a bullish bias. And the key level that I'm monitoring right now is around 102.20, which is this little high. Ideally, if we're going to time it together with the FOMC Fed funds rate on Thursday or Wednesday midnight, we want to see perhaps a catalyst, which can mean that maybe the Fed give a very surprise hike of 0.5%, and then the dollar strengthen and this push off impulsively. Okay, so that's something to look out for. Of course, I don't trade the dollar index DXY directly, but what we can then look into is the euro dollar itself. Okay, these two kind of like have quite a closely inverse relationship. Okay, so same thing over here. If you take a look at the euro dollar chart, we have this price structure, which is what we call crawl, right, or diagonal. If you bring in your RSI, you can again see a very obvious divergence that is building. So what we are looking here is definitely for a sell side opportunity. Okay, again, this may not be a huge total reversal, but there's a good possibility the market might come down a little bit more. Minimum, my expectation here is at least retest around that 1.0715 or 1.0710 area, okay, which is this low here. So a potential sell trade opportunity is to look for the break below 1.0855. You can put some protective stop above that. Okay, and the primary target can be here, or if you're more aggressive, you can even look for a possibility of it retesting this previous low. Okay, so that's definitely one trade to look up for this week itself. But of course, you need to then also take note of the part where we have ECB coming in. So this is obviously not so straightforward. Okay, you need to be very clear in terms of your trading plan. How many weightage are you giving into the technical portion of your analysis, as well as the fundamental side of things, right, which is the economic data and things like this. Okay, so that's on the euro. The pound dollar itself, short term here, I'm anticipating a little bit of a pullback to complete the three wave structure over here in terms of WXY. So I'm waiting for a pullback towards 1.2240. Okay, if I can get a decent pullback, then I might consider a potential buy trade here for the upside. But for now, overall, I'm maintaining a pretty neutral bias. The market is currently having a kind of topish formation here as well. Not a good idea to be buying in at this moment. But again, this is not a sell setup either, right? So for me, I'm just maintaining a very neutral perspective on the pound dollar here. Okay, Aussie dollar, we do get a decent sell opportunity to look out for as well. Okay, from an Elliott Wave perspective here, we kind of have our wave 4 come from here, and then within this we have our 1, 2, 3, 4, 5 as well, and then we do have a cluster of confluences around that area of 7115. And right now the market seems to show certain sign of a rejection. So personally, this week I'm looking for a sell opportunity with a target back towards 6875. Okay, not a huge kind of reversal target, but the expectation here, if the market can pull back down here, that will be a very decent trade, because we do have a couple of confluences around that zone too, right? You can see here previous resistance turn support. If the market can come back around that zone, that will be a pretty decent area to look for targets. Okay, so that's on Aussie. Again, we are looking for dollar strength, right? If you're selling the Aussie dollar, you're looking for dollar strength. Same kind of like bias on the euro dollar, because euro dollar we're also looking for dollar strength. Okay, on the other side we have the dollar Canadian. Dollar Canadian here is a little bit counterintuitive in a way where Aussie dollar we're looking for dollar strength, euro dollar we're looking at dollar strength, dollar index we're also looking at dollar strength. But the dollar Canadian here, I'm more into looking for a sell. Just simply based on this count here. Let me go to the higher time frame to show you, okay, to see more clarity. We're kind of expecting this as a 1, 2, 3, right? So we're expecting a little bit more downside over here to complete this before the bigger move up. So that's why I say it's a little bit counterintuitive in a way where if the dollar strengthens, then we might expect the dollar CAD to go up, right? But from a technical point of view, dollar CAD is showing a little bit more downside opportunity. So perhaps what can happen over here is perhaps the dollar may not strengthen, okay? Or perhaps the Canadian dollar is going to strengthen more relative to the dollar, the US dollar DXY itself. Okay, so obviously that's something that you need to have like accept in trading, okay, because nothing is going to be all the time in perfect alignment or imperfection, and it's all about just probability, right? So for me, I primarily focus on what the charts are telling me, and then I utilize a little bit of fundamentals and economic data to supplement the trading decision and things like this. So for me, my directional bias in dollar Canadian is still bearish. I'm still looking for a sell. The market did break that previous low here at 1.3340 last week. So at this moment, we're kind of expecting a little bit more downside, potentially to 1.3160. And of course, we're expecting even more to the downside eventually, right? But primary target is currently at 1.3160. I mean, from this drop to this drop, I'll be more happy to just take profits. Okay, that's on the dollar CAD. Going into the dollar yen side of things. Okay, I'm holding a little bit of a neutral perspective, quite similar to my view on pound dollar. Pretty neutral over here. But there's a short-term, quite aggressive opportunity to look for a sell. Okay, to kind of complete this 1, 2, 3, 4, 5, and then we can then expect a bigger move back up on the dollar yen. Okay, so it's just a matter of like how aggressive you are in your trade plan. Okay, would this be something that interests you? Okay, to kind of take that trade to the downside as well. So from a larger time frame perspective in the dollar yen, it has been falling quite aggressively recently. Okay, especially with the adjustment of the YCC policy, right? Yield curve control. The yen has been strengthening quite a little bit, coupled with the dollar weakness for this year. We can't see the dollar yen drop quite significantly, but at some point in time, after a sharp drop, they're bound to be some kind of bigger retracement soon, right? So if you're conservative, my suggestion is to wait for maybe this drop to complete, then you look for a buy. That's definitely more conservative, because if you're looking for a buy, then maybe your upside potential may be more attractive. Any sell over here, if you're looking at it, probably is going to be more of a short-term trade. Okay, so that's on the dollar yen. Gold here, we are looking at some short-term trade as well. From a long-term fundamental and macro perspective, I'm quite bullish on the commodity space. Okay, we shared this also during the traders meetup networking dinner. Okay, but right now, from a technical point of view, I think short-term we might get a decent pullback towards the previous low at 1870. Okay, if you look at the daily chart on gold, it has been quite aggressive to the upside. Okay, and buying at such a high price at this moment without any kind of pullback may not be a very kind of like in terms of risk reward, it may not be very attractive. So if you're looking for longer term buy side, my suggestion is to be a little bit patient, wait for the 4-hour pullback, maybe around 1870. Okay, that's where you can look up for it. If you're more of a counter trend trader, gold is again building up a very solid divergence. Okay, which again suggests that there might be a decent pullback soon, right? And for gold to drop, one of the potential catalysts can be dollar strength. Okay, so that's something to note. The other commodities over here is crude oil. Okay, so crude oil over here, we're kind of expecting more downside. The market continue to drop today. We can see this as a potential ABC 3-wave completed, a mini triple top formation here as well. The market kind of broke this trend line. So any pullback or retracement, you can look for a sell, potential target at 70.30. Okay. So crude oil over here, again on the higher time frame perspective. Okay, you can look up for it as it drops to its 70.30. It might form a daily double bottom for a bounce. Okay, but for now, short term, this is the opportunity to look out for. S&P in terms of equities, we're kind of back at this daily channel trend line at the top. 4-hour wise, we're seeing a little bit of a rejection. Okay, around that 4098 or 4100 area. From an Elliott Wave perspective, we can potentially see it as a WXY, a 3-wave corrective structure completed as well. Then from here we can expect a deeper pullback, perhaps to retest the bottom. Okay, so we have a pretty decent run in the equities market, at least for January. Today is the last day of it. If you really track from the start of this year all the way until where we are right now, I think it's up by about 5%. Okay, so if you take a look, like the start of the year somewhere here to here, 7.9, where we are right now is about 6. Of course, we didn't start at that very low. The year kind of started here, right? So it's about 5%. So which is great. Okay, if you account for like average yearly return on the S&P is about what, 8 to 12%. On average is about 10%. This month itself, if you look at it from the start of the month until where we are right now, it's 5%, okay, which is almost half of the average yearly return in a month. Okay, so that's definitely a very aggressive push up for January. Okay, and just don't be surprised if you can't get a deeper pullback, and then after that we can still get another rally back up. My personal view over here is that there's a very good chance we're gonna see the equities market transit into a bull market this year itself. Okay, the question is just a matter of like, when are we gonna get it, in second half of this year or maybe Q3 of this year? Okay, but there's a very high possibility from a macro and fundamental point of view. We're gonna see a bull. We're going to see the market transit back into a bull market in 22-3. Okay. Last one here I would like to cover is a little bit on the crypto and Bitcoin side of things. Okay. So Bitcoin recently had a pretty massive rally, and of course, right now though, if you bring in again your RSI indicator, we can see the lack of momentum to the upside. Okay, and therefore short term again is something that you can consider if you're a kind of counter trend trader. We have this little structure over here, and of course depending on how aggressive you are, you can even move this up a little bit to keep track of 22765. Okay, and of course if you can get a break of that, then that's a good short term trade, perhaps back towards that low at 20465. Okay. Not a good idea to be buying at this particular structure, okay, because this pattern often suggests a reversal. So if you're bullish on the crypto market or even Bitcoin specifically, the suggestion is wait for a pullback first. 20465 may be a better opportunity to look for the buy trade. If you're counter trend, focus on that sell opportunity. Okay, yeah. Good. Okay, so cool. I see one question over here asking after a 1 2 3 4 5 and ABC structure has been completed, how do we forecast the next? Okay, let me take a chart and draw it in for you. Okay. If you kind of see a very clear, let's say for example 1 2 3 4 5 and then a pullback of ABC. Okay, when you finish off this structure over here, what you then look out for is a bigger scale, right? So bigger scale means that if this is one move up, this is a pullback, we can then expect another move back up over here. Okay, and from a bigger scheme of things, then you anticipate this as one move, this is a second move, and then you anticipate this third move up, which this third move can again be internally a 1 2 3 4 5. Okay, and how you project this is you use the equal length projection. Okay, which means this first move here, if it's going to be, let's say for example, 100 pips move, then you project over here 100 pips move as well, right? So you, at least minimum expectation you can forecast is a 1:1 kind of relationship. Cool. Okay, so that's how you can look up for it. The beauty about Elliott Wave is that we have this principle called the fractal nature, which means a smaller pattern can complete. You just have to look at a bigger degree, and you would find another pattern itself. Okay, so each of this pattern happens in variations of sizes. Okay, and in a technical term, we call it different degrees, right? You have a smaller degree and a larger degree. Good. Okay, so those are a few things that I wish to cover. Very quickly over here, a little bit of housekeeping. Okay, if you have any questions, just type it in. But I'll do a quick closing note over here to share with you some upcoming offers as well as events that we have together here with Everything Trading as well. Okay, so first up, we do have this deposit bonus with the trading partner called Zenfinix. Okay, so if today you're watching on YouTube, in the video description below, you can actually see a link that I say WhatsApp, okay, to the Zenfinix team. You can directly click that link. It will bring you to the WhatsApp, okay, and then you can reach out to the Zenfinix support team. Okay, if you're watching on Zoom, okay, they have also dropped the WhatsApp link over there. All you have to do to get this deposit bonus is, of course, you need to register for your own trading account. Okay, you can make a deposit of $100, $200, or $500 depending on how much you put in. The credit bonus will be different as stated. Okay. If you want to find out a little bit more about this, feel free to reach out to the team via WhatsApp. Okay, so that's why that link is important. Okay. Another thing to note is if you're not in the Zenfinix Trading Dose Telegram channel, it's free. Okay, and what I do over here is I do post one chart a day to just give you some ideas, some insights into what's happening in the market. Okay, what you need to do to join it is to simply scan this QR code that you see on screen. It will lead you to Telegram channel, and then you just click join. You're in. Okay. This Telegram channel will also be updating, whether we have some events and things like that. We'll just post it up so that you can be notified too. Okay, so that's the QR code to join. Next here, we do have some upcoming events, workshops in KL. Okay, so this is specifically, I think, if you're based in Malaysia, you're based in KL or PJ, be able to join us, right? If you're overseas, then it's a bit challenging. We're gonna have two types of workshop. One is what you see over here. The title is called Getting Ready for the Next Super Cycle. Okay, we have two sessions on this. The content of both sessions are gonna be similar. Okay, so you can either join us for both if you feel that you want a refresher, you need to have more session to kind of really internalize the content, feel free to join us for both sessions. One is going to happen on the 11th of February, which is on the weekend. Afternoon, 2:30 to 5 p.m. The venue is at Red Curtain Event Space. And then the other session is going to be on the 15th, which is a weekday or Wednesday evening at 8 p.m. to 10:30. It's going to be at Amador Hotel. Now, you need to RSVP and register to attend. Okay, yes, it's free, but you need to RSVP because the venue itself have limited seats. Okay, so how to register, how to RSVP? Again, utilize the WhatsApp link. Okay, click on that link, it'll bring you to WhatsApp. Reach out to the team, tell them you're interested in this event, which date you want to join, how many people. Then that's it, right? We'll see you on that day. If you have friends who are interested into trading and investing as well, do invite them to join along as well. Okay, in this particular workshop, I'm gonna share with you specific stocks, specific commodities, specific FX to be looking out for this year. Okay, so whether you're short-term trading or long-term investing, this workshop might be able to give you some insights. Okay, so that's one. The other workshop that we have is kind of like a masterclass itself, right? It's a training, it's a full day training. So this one here is going to happen on the 25th of February. It's going to be a full day event from 10 a.m. to 6 p.m. The venue is yet to be confirmed at this moment. Okay, but the date and time is confirmed. So this is gonna be a Elliott Wave Masterclass workshop. Okay, so what we're gonna cover inside is definitely the entire thing of how I use Elliott Wave to analyze and trade the market, right? How we use it to forecast the market as well. What are some of the principles we look into and things like that. The retail price for this, if you go to my website and you would like to register and participate in this course. The retail price is at $497 US. But today you're able to actually join this masterclass. It's a live event, physical event, for free. Okay, fully sponsored by Zenfinix. But of course, in order for you to do that, you need to first be a valid client with Zenfinix itself. Okay, so again, if you would like to find out a bit more about this, feel free to WhatsApp directly to the team at Zenfinix. Use that link again, bring you to WhatsApp, ask them about it, and then they'll help you and guide you along the way. Good? Yeah. Cool. Okay, so those are some of the housekeeping, some events that I just want to share. I see a question here coming in as well. The question is, what is my view whether the tech rally would continue? Yeah, so I think that's a question related to the tech sector, right? Okay, if I'm not mistaken, should be this one. Okay, let me do a quick look at that. Now first thing first, my overall view on the equities market for this year. Okay, I mean not like this week itself, but this year, I'm bullish on the equities. Okay, but if you're asking about specific sector, then things might be slightly different too, right? Because the S&P can rally, but certain stock may not rally as much, or even certain stock may just go sideways. Okay, I think one key level to look up for in the technology sector as of now will be somewhere around 147.50. You can see from where we are to that level, we still have a little bit of room. So perhaps any kind of pullback right now may still be an opportunity to look for a buy. But when the market reaches around 147.50, you just want to be a little bit careful, because then that might also present kind of like a double topish formation over here. Okay, if you ask me, what is the one catalyst to take note of when you're investing or looking into tech sector? I think interest rate has a significant kind of like factor to affect the technology sector. Okay, companies I think you mentioned like Amazon, Tesla. The part here is because it's some companies in the tech, right? I would say most companies in the tech, they are considered growth stocks, right? Companies that are still growing, and interest rate plays a very big role in that because of the loan, right? Of the interest. But there's another part that we need to monitor is what we call capex, okay, which is capital expenditure being pumped into certain sectors as a form of investment. Okay, and this is the part where in the upcoming workshop, right, the getting ready for the next super cycle, we're actually gonna talk about this thing called the capex, right, or we call the capital cycle, where we look into the macro perspective of understanding where has the money been invested, okay, and just to give you a very quick summarized version today, a lot of money have went into the technology sector in the past, I would say maybe 8 to 10 years. Okay, that's where after the dot-com bubble, you see a lot of tech companies just boom, right? Okay, that's where a lot of investment starts to go in because when something is going up, okay, investors are attracted to that. But moving forward, okay, if you're still gonna have that expectation where tech sector is gonna grow exponentially, probably not, okay, but the next super cycle is gonna happen perhaps somewhere else, right, where because of the past 10 to 8 to 10 years, a lot of money has been pumped into the tech sector. There are other sectors that are neglected, and right now that's where it kind of provides a exponential growth opportunity. Okay, so I'm not saying that tech is not investable. Okay, it's just that if you're comparing in terms of opportunity costs, there might be some other sectors that may be more attractive as compared to like the technology itself. Yeah, so I hope that kind of give you some different perspective and insights into it, right? But again, those are my personal view. Just hopefully give you some different perspective. Okay, good. Okay, yeah, so that's all from me. Just a quick summarized version over here. Okay, we do have a couple of offers and of course events that are upcoming. Okay, so if you're keen onto that, reach out to the team at Zenfinix and Everything Trading. Again, click on the WhatsApp link. You'll be able to inquire more directly with them. Yeah. Okay, okay, so the question is which sector? One of it is definitely the commodity scene, right? So you want to look into the commodity sector itself. Okay, so that's all from me today. Hope this session here provided you some insights, okay, some ideas, things to look out for this week as well as the longer term. Okay, so the best to trading. With that, I'll see you guys next week itself. And of course, for those of you who are interested in the workshops, right, and the masterclass, do make sure to RSVP ASAP. Okay, because once the room has been filled, then it's a bit challenging to put you in as well. Okay, so if you're keen, make sure you RSVP ASAP. Good. Okay, so that's all from me. All the best, and we'll see you guys next week.